What is going on YouTube? So I haven't made a video in a long time. I think it's been probably, I don't know, a couple months, maybe a year or so. But I'm still trading. I kind of stopped with like the gym vlogging and all that stuff. So I'm still trading, and I still trade every single day. You guys can see the history on this channel. You can see that over like 2 years ago, I was kind of losing every single day, kind of thing, and I was a little bit struggling to make just only $50 in a day. Right now, I can proudly say that I can make anywhere from $1,000 to $3,000 of my own money, not prop firm money, of my own money in a single day. So I'm proud and happy to say that. So in this video, it's just going to be a quick trade review video on how I made 1.1K, which I'm going to show you on how I made 1.1K in less than 20 minutes. All right, so I'm going to show you a quick breakdown, trade breakdown, and show you essentially what happened, what I was thinking, and why I took this trade. So let's get right into the video. I'm going to keep this video as raw and as uncut as possible. But over here, so essentially I was trading S&P 500. I was trading the futures contracts. Sorry, SPX. I was trading SPX, not ES. So I was trading SPX. But for me personally, the SPX, I like to trade SPX. I like to use the SPY chart. I just feel like it allows me to see things much more easier. Anyways, I'm going to show you the P&L just so that you know I'm not capping. And what I'm going to do is I have two monitors. So I have one monitor here, right? This monitor here, and then I have one monitor right here. This is the one I'm looking at. The one monitor, I'm looking at this one. I'm gonna go onto my keyboard. I'm gonna press screenshot, okay? So right now there should be a screenshot thing going on. I'm gonna take a screenshot of my P&L. Okay. Alright, I just took a screenshot of my P&L, okay? I'm gonna go into my files, right? And then I honestly don't really have any personal information here, but let's see, is this the screenshot? No, so let's go to screenshots over here, scroll all the way down, screenshots right over here. I literally just screenshotted this. This is Interactive Brokers 2024, the 10th 8th. Look at what time this video was uploaded. You could see this exact screenshot. Okay, so I made essentially $1,100 in less than 20 minutes today. Let me show you the trade and what I was thinking through it. So I actually, to be honest, 100% transparency, I woke up late. Market opens for me at 6:30 a.m. I didn't get to the market until 7 a.m. All right, I didn't get to the market until 7 a.m. So I stepped on at 7 a.m., which is good because normally, me personally, I like to wait the first 30 minutes. All right, and I'll show you why. All right, if we traded the first 10, 15 minutes, we would have taken a loss over here and probably got chopped out over here, right? If we traded the first 10, 15 minutes over here, we'd have got chopped out, loss, whatever. So it's a very healthy habit to wait the first 30 minutes. Like, let's look at this first candle. 6:50 is when this candle came into play. So 10 minutes before until 7. This was the 7 o'clock candle. And then right at 7:05, we had this perfect retest opportunity right over here at 571s. And then you could have caught a short to 568. So a big move. Anyways, so me personally, I like to wait the first 15 to 30 minutes. All right. Now, my strategy, I have 4 specific setups. Okay. 4 specific setups. I mark out my pre-market low and my pre-market high, okay? I'm looking for either a break and a retest. So break, retest of pre-market highs, and then target a key level, okay? That's my long plan and my long setup. And my short setup is to do a break and a retest of a key level, which is my PM low, to the downside, all right? That's 2 out of 4 setups. My other 2 setups is either a pre-market low bounce for it to move up, so I'd be targeting longs in this case, and then my other setup is a PM high rejection and then short, so I'd be targeting shorts in those cases. So those are my 4 personal setups. All right, so this was today. Okay, why did I trade SPY? Well, I lost a lot of money trading this action over here 2 weeks ago. I essentially got faked out here, faked out here, faked out here, faked out here, faked out here. Just 3-4 days of just straight losing. So I had to take a break from trading, and I had to come to my senses and realize, hey, listen, we're in a range. don't touch the range, all right? Never trade a range. If you trade a range, you will lose. You're going to lose so much money. Just like me. I think I lost like 1,000 this day, 700 this day, 800 this day, another 1,000 this day. It's not fun. Don't trade ranges, okay? But luckily, I have good risk reward ratio and I can make that back in one trade, okay? Anyways, so we're still kind of ranging, all right? We still kind of ranging. But the thing is, the thing that interested me with SPY is that if you look down over here, we had at 566, we had one bounce, two bounce, three bounce. I don't know if these count. I mean, I guess you could say four. And then we had this one more bounce right over here. Every time we bounce up, we get a nice reaction towards the upside. Not too nice for these bounces, but this bounce over here, we got a nice reaction all the way to the upside to 573s, came all the way back down, and then bounced again with a huge wick. So in pre-market, I noticed that we actually made a huge move up, right? And what is 3 consecutive bullish candles? That's called the 3 crows. And I think downside is 3 black crows. So anyways, I saw that in pre-market we made a nice move up. Okay, this is the 4-hour chart. This is how you determine your bias and whether you want to trade long or short. Essentially, if you want to go long on a stock, you got to make sure that that 4-hour chart is trending up. If you want to go short a stock, you got to make sure it's going down because you want the trend to always be on your side. Now, right over here, pre-market, I noticed that we made a nice reaction from that 565, 566 bounce, and from 567 90s until 570s, we had a nice move up in pre-market, right? Anyways, I go down to my hourly, all right? I'm going to reset everything. The first thing I do every single day is I mark out my previous day high, all right? I'm going to do red for the highs, and my previous day low. So that's the first thing I do, okay? And why do I do this? Well, this gives me an idea of where we are, okay? Are we in previous day's range? If we're ranging from the previous day, then it might not be a good idea to trade it, right? Because if the range is very tight, like if this is the previous day high, previous day low, we're continuing to range, okay? We want to make sure we break out of that range. Now, if it's a wider range, that's my exception, right? If it's a wider range, then I'm fine with trading, just because there's going to be a wider move up or down, right? So anyways, I mark out my previous day high and my previous day low just to give me some reference of where we are. And then over here, I'll mark out some key levels on the chart. So we had this key level at 573s over here, and then we had another key level up at this high, 575. I didn't think we were going to hit 575s anyways because we made huge move up already. But until this previous day high, at least, is what I was anticipating, and then maybe for 573s. Now, I went back to my 5-minute, okay, and I marked out my PM highs and my PM lows. So right over here, we had a PM high, pre-market high, and then right over here, we had the pre-market low. Simple. I've only placed a couple of lines on my chart, right? It might have looked confusing at the start, but literally we're back at it. I removed everything and we're back at it. These EMAs are whatever. They're just here to help me to hold a trade or whatnot. Anyways, my sleepy ass, I get up at 7. I come to the charts. I'm like, we made a huge, nice move up in pre-market. Now we're consolidating, okay? And I wasn't here for the first 30 minutes, but it looks like from 569, 60s, 70s, we made a nice move up, right? So what's the stupid, dumb trade to make over here is to go long when we retest the pre-M highs and, the opening highs, right? So me personally, I like to go on the 1 minute for my entry time frame. Let me show you what I did. So this happens, all right? Big push up, comes down, double top, right? It's the 1 minute. We don't trust the 1 minute. We just trust the 1 minute for we trust the 1 minute for entries because it's very exact. It's very defined, okay? Anyways, let me show you my first trade I took, which was the L, right? So right over here, let me zoom in a little. On this candle right here, we had a nice wick reaction, basically from that PM high, all right? We had a really nice wick reaction from 570s, 570.63. We had a nice wick and we closed in a good position, right? So what did I do? Well, I personally decided to go long on the next candle. I went long on the next candle, and what I did was I set my stop loss, which I don't know why I set it so tight, but I essentially set it at a break of PM highs, right? I don't know why I set it so tight. And then I set my take profit for previous day's high, right? I wanted to kind of take a quick trade because I know tomorrow there's news, Wednesday, October 9th, there's news on that day. Pretty important news. I can't remember what it was, but and then there's FOMC as well. So I just kind of wanted to take a quick scalp trade, to be honest, which is kind of what happened, right? So let me show you. I take this first trade. I lose. I'm like, damn. Like, I think I entered a bit too early or I just chased it a little, right? So that entry was a loss, right? I get one loser right over here at 7:11 a.m. Cool. Now I wait again, all right? I don't just rush back in. I waited again. And then from waiting, I noticed we broke down, okay? But then we had a huge, nice candle that broke above the PM highs and closed above it. So I'm like, maybe we're not being as bearish as I thought we were. Some chop happened, and I noticed that all these wicks here were just rejecting that level. So I was like, screw it. You know what? I entered on this wick that had no upper wick, but it had a nice, really low wick kind of thing. So I entered around here, and my stop loss kept it tight, right? Because I was like, bro, I'm not going to take 2 losses on this trade, especially a bigger loss. I'm not taking that, right? So I just put my stop loss right over here, below that previous low. And I was like, if we break this previous low, I'm just going to get out because honestly, like, what's the point of holding if we break below this previous low? Because that means we're breaking structure and we're going to go to the downside and then slippage is going to get me and I'm going to be screwed. So anyways, that's where I set my stop loss. My take profit was just previous day high. Okay. This is my take profit. So this gave me a 4.57 risk reward ratio. Okay. Just because I kept a tight stop loss. What happened? Well, I'm trading options here. Theta kind of screwed me over here. Just chop from 7:20 until about 7:40. I got stuck in 20 minutes of chop. All right. And if you don't know something about options, yeah, this is going up. Okay, on a regular stock and on futures, this is going up. Technically, you would be in profit over here. But in options, we have something called Greeks, all right? In Greeks, there's something called theta, and it's called time decay. And it means that the option contract isn't going to move as accurately as the stock symbol is going to move, right? And that every single minute that it goes by, that option contract is eventually going to go to zero, right? So the only way those option contracts move is if we get a nice move up, right? The options contract moved over here. We had a nice move up, so the option contract moves. But if you're trading consolidation like this, the option contracts, what they're going to do, they're just going to do this for like 20 minutes. You're going to do this, right? That's what the option contract is going to do. Say you entered over here, we went long, you're up $20, you're back to zero. You're up $20, you're back to zero. You're up $20, you're back to zero. But over here, we're just going up, so you should be up like $140 here. But no, you're back to zero, right? I was at $0 over here, literally break even though I was up. Anyways, and the stop loss thing was still kind of the same. Like, it was up a little bit, but nothing anything crazy. Anyways, I had no clue what happened. There wasn't news, there wasn't data, there wasn't anything, okay? But at 7:42 a.m., we got this candle. This huge candle from 571 until 572.45s, right? And normally, after we get this big candles, it instantly rejects, all right? It comes down literally almost instantly, right? So me, being the lucky person that I am, I was like, holy shit, what is going on right now? And I decided to sell like around here, okay? Because I was like, bro, I'm just going to get out of these contracts because like I'm up like so much on my position. I'm up like a couple 100% on my position. So I'm just going to get out and take that as for what it is, because like we said in options, you don't make any money on this, okay? If my entry was here and I got stuck in this chop, well, my entry isn't really here anymore. It's going to be like over here, and it's me stuck in this chop. Like, I would have probably got stopped out over here at 816 if I held this trade. Anyways, so I was like, no, I'm just going to take it out. And that's what happened. So I was in this trade, and then boom, we get a huge spike up. I'm up like 2.1K over here on this candle at 572s. And I was like, oh shit, like, bro, I'm just going to sell because this is a really big bullish candle. And I don't get the fill until like somewhere down over here, which ends off the day at 1.1K. Now, am I happy with that? Sure. I made 1.1K in 20 minutes, 25 minutes. It's not bad, right? Obviously, I would rather have $2,000, but it is what it is. Um, and the one thing I do to kind of get away from those negative emotions like greed and stuff is like, bro, what would you do if you got stopped out before that happened? You would be way more pissed. What would you do if you didn't enter again? Right? If you just let that stop loss hit you, you'd be way more pissed. So just be thankful that you re-enter that trade, that it didn't stop you out, and you took your money and you ran. All right, just be thankful, right? That's 1.1K of my own money, literally my own money. I'm not trading on a prop firm anymore. I'm trading with interactive brokers, regulated broker. You can't really fake shit on there. So yeah, that was my trade review. That was the strategy, and that is how I made 1.1K today. If you want more trade review videos, comment on this video, and I'll be sure to answer any question on it. So I'll see you guys in the next trade review.